Hey everyone, welcome to Market Mamas. Thank you for joining us today. I'm Kendra and this is Becky. We are day traders from the US. Becky is in the Pacific Northwest and I'm in Northern California. We both started learning day trading in early 2021 and became trading partners a couple months into our education. And now we're here. So both Becky and I have traded stocks, commodities, options previously, but now we are focusing solely on day trading futures. And we also now trade with funded accounts for our capital. We decided to create Market Mama's Day Trading Psychology podcast to share all of the growing pains and the inner workings that come along with becoming a developing trader. So we have a big library now of videos on various topics, must-read book recommendations, and real trader interviews. Some of the very hard work Becky and I have gone through and grown through is accepting red days and that we're in the game of probabilities. And that's what trading centers around. So today we're going to jump right into this topic for this week and discuss how it's challenged us.
Yes, red days are so hard. In the moment when the market goes against my trade plan, my stomach falls. My heart rate increases, my palms split a little bit, my mind starts to blur in a hyperactive drive that is trying to figure out in that moment how I can somehow prevent the stop out that I see price approaching. So I fully appreciate and respect and am honest with you that this is my trader immaturity still. This is me still not wanting to be wrong and accept a loss. It means that I was counting the win in the moment and not completely accepting the risk when I put on the trade. I'm slowly improving at this, though, and I'm remaining calmer and accepting the risk more fully. But this has been an area for me specifically that I have really had to acknowledge, actively work to change. I had to own it and realize I was holding my own damn self back by not doing better with red day management. As a consistently profitable trader that I'm growing into, I want to experience the uncomfortable but ideally peaceful outcome of a small red day that can be really hard to accept at the moment, but is sustainable for my trading account versus not accepting an initial small loss and engaging in fix-it battle with the market and all the toxicity that brings. The latter can lead to trading trauma and serious account and progress damage. Just this last week, actually, I had a struggle day. My first trade was a loss, but I didn't walk away right away and accept it and recenter myself. No. Instead, I took, I believe, 4 more trades in the next 45-minute period. And at one point, I had nearly gotten my accounts back to a net zero on the day and indeed fixed it. But my profit target was missed by a hair. And then price rapidly pulled back with me still in it. So insta worsened frustration, and then 2 more rapid fire, almost impulsive trades after that moment that sent my accounts from almost neutral to just over my trade system's daily loss limit. So here I finally snapped out of the trance. I messaged Kendra. I forced my system to close down on the day. And then this type of trading session, it's easier than I wished to sink into. I was not proud of the fix-it attempts in such a tight succession that day. I did stop near my daily loss limit and I walked away from my office for the morning. And that was a big win at the end. And it was an improvement for me on a potential full tilt day where I could have done more damage, honestly. So maybe it's like a medium tilt day, a contained tilt, but this was another lesson day ultimately. And I definitely spoke to my core people in my locker room in the aftermath, and I acknowledged the day and how I handled it. And you know what? I have been steady and green since that day. So, I mean, you gotta take this shit in stride, you know? This is literally the example of a red day not having to have a big impact on your overall journey if you can keep it from fully imploding. So we've all heard the timeless quote that is so appropriate from Jim Rohn. We all must suffer one of 2 pains, the pain of discipline or the pain of regret. The difference is discipline weighs ounces while regret weighs tons. So this is completely synonymous with the 2 different types of red days 100%. And I totally understand them.
Yes. Oh my gosh. Contain tilt. I really like that. I'm going to have to start using that because it's true. Like we're not immune to still trading, getting in our emotions sometimes because it does really suck when you're missed by a couple ticks or it's just the timing's just off. And you're like, no, like I had this day like in the bag. So red days are lame for sure, right? And I'm also always working on cultivating that better trader maturity, but I also think that I'm no longer striving to completely detach my emotions, because a red day, it does give me valuable feedback and performance data to then examine. And I like what you said about being sustainable, keeping those losses small and contained. And it just reminds me of one of the principles that we have discussed previously, which is the better you manage your loss, the quicker you can get back to winning. So I believe the less we do engage after taking a tough loss or repeated losses, the more easier it can be to then restore that sense of clarity and build back that confidence. You called it out, I think, that day as acute irritation or annoyance. And I believe that that can just eat at us so much if we let it. So I'm happy that we are both making great strides to overcome those temporary feelings and not allow the real toxic behaviors to surface. There's nothing more draining and disheartening than engaging in a full out bloody war with Miss Market. There's enough to learn and grow through, even on days when we're executing from a very sound and solid stance. So fingers crossed we can to keep fighting that battle in our minds and not having that battle on the charts. By the way, we've also jokingly referred to this as a confetti party. I can't take credit for coming up with that. It was another trader. But basically what it means is if you had a crazy, vicious, all-out war for a day, and if you were to turn on all your fills on your trading platform to see all those executions, it will look like it's been covered in sprinkles. And if only it was a fun and sweet experience, but it's not.
Girl, the screenshots we have of our confetti parties of years past, it's special. There's green and red, and it's up and down, and it's literally from all the, yeah. Mm-hmm. It's a great term that we have witnessed, and probably now that we've said it, everyone else is going to see now too in their history. Hopefully, in the past, the distant past of your trading, because now we are engaging in only our best setups, right?
We're having contained tilt now. Contained tilt, as you said.
It's like very mild sprinkles. It's like artfully applied classic sprinkles. All of my trading mentors have discussed the influence of probabilities with our trading experience. So we're going to loop this in so that it helps us understand the big picture better. How probabilities is an important part of the game for us to understand and learn to appreciate. Some days we will simply not have it with our analysis or executions. And on those days, if we can pull our bodies and our minds away from the chart and let a reasonable loss sit, then we live to trade another day, as our Bella says. Miss Market really is abundant, and each day presents fresh opportunities for us to choose from per our lens with our trading strategy. As I understand it, there are a couple ways to utilizing your understanding of probabilities tied in with your trading depending on your style. So some traders are true scalpers at heart. And with that style, some of the most successful traders I have seen, they want to take a hit early, often, and small. They want to be the first ones to know that the trade isn't holding so they can wait for a better setup that honors their risk tolerance. So by learning to take the hits when they're small, they can afford to enter with a larger, higher leverage position and still be accepting of the hit and keep their head in the game. This style may lend to more frequent stop outs, but also a steady equity curve because they never take a hit too large if their risk management is maintained and contained, that is. Essentially, you take paper cuts in pursuit of solid trades. And then once the trade is taken that's solid, it's really good, the paper cuts are surpassed. So it's definitely a style that honors probabilities in that it recognizes that not every trade will win, but keeping the losses small is really a sustainable system. This strategy, it can have a 50 to 60% win rate or even worse, I have seen. So when you put it like that, it doesn't sound amazing, right? But you have to see it for the bigger picture. This particular trader, he could take 4 stop outs in the morning that total in 2K of losses in one session. But then the setup really presents and he gets in and he nails that trade for an 8K win. So statistically, that is a 20% win rate on the day, but it results in $6,000 in profits, less fees. So that's a system that wins when you honor that risk management. However, another type of trader might approach probabilities slightly differently. This is more likely a larger time frame trader or a swing trader. So with this style of trading, your stop losses are not tight and frequent, but instead more purposeful and highly calculated. This trader might be trading off the 4-hour chart and have a stop loss based on that level and data. Now, with an established, studied, tried, and reliable edge in this time frame, the trader can still choose to enter a large position. If the stop was then hit with this large position, it would be a more substantial by far than, say, a scalper's tight stop loss for one trade. But statistically, it can work because with the larger time frames, they tend to be a little bit more reliable with movement and give you time to adjust and wait for the setup that's just right with the market, and will have further and much more substantial profit targets. So these traders can find awesome profitability with much less daily management time requirements, because their profit targets may take 2 to 8 days, say, to achieve and then be significant in size. So a higher win rate is generally associated with established swing traders as well. Not baby swing traders, but once you really dial in your system, it can be consistently like an 80% success rate. So these are two different methods, two different styles of trading, but both use probabilities mixed with that style to yield a nice profit. So for me, I'm scalper's energy for sure. It's more my vibe, but I can totally appreciate the long game trades too. And I actually really intend to get solid with that approach as well with time. So I really love the way you can understand probabilities with your system and figure out how to work it.
Yeah, I love that you covered both of those approaches. And yeah, I mean, both of them take time and just a lot to learn and grow into. But I love that you brought up that point about trading larger timeframes, because quite a few of the public trading gurus, that we watch and have studied, they evolve into swing trading eventually and take those amazing moves. So that is goals for sure. Another important aspect of understanding trading probabilities relates to the unique method of each person's system. So, Becky and I both day trade futures US markets, but the exact method of how we trade, create our trade plans, really read our data in real time, it's very unique to our own style. So for example, I lean heavily into market profile to define my levels of interest for entry and targets that I want to trade to. I also use footprint order flow as one of my data tools to understand the imbalance of volume between buyers and sellers. Then there's things we both use like VWAP and divergences from momentum indicators such as stochastic. Granted, we no longer trade the same futures instruments, but there was a good amount of time when we both did trade ES, which is the S&P 500 index. And we would usually have very, very similar interest and targets. So it's such a cool technical thing about trading that there is really not one right or wrong way, but only your way that you can understand with and repeat to start to build the probabilities of success for each trade for every entry that you make within that trading edge. So let's break that down for a minute. In this way, we can see probabilities as a representation of confluences. The more confluences or reasons you can recognize in real time that support your trade bias and favor your setup, it usually can and does result in a higher probability of it being successful. So that's kind of like the big box that ideally is checked before entering any position. This understanding is another part of trading that only comes with time and experience. The goal for me is to be as selective as I can to build that muscle of recognizing my pitch and then acting when I need to. And if I've done that, then I've done my job. However, it turns out will vary, but respecting the game of probabilities is so important. So it makes me think of another Bella quote from the One Good Trade book, where he does say that you can do everything right and still in red. So trading nicely nuanced and can send you chasing your tail if you let it, but respecting that as just a hard, cold truth about trading, it is critical. We show up and we do our best on our systems and trade our edge and just learn along the way.
Yes, girl, I love, love, love when my best setups show their faces and then they call me to join the move, I swear. There are times when I can see the market setting up for a move that I really tend to see well. There's certain bread and butter setups. It's prices approaching a level that can sometimes hold as support, such as an LVA. And then this level is also in confluence with a previous 4-hour support level. Your momentum indicator is along the lowest levels. We're along the -2 standard deviation band. And then you see a bullish candle pattern forming. Those trades don't speak to you, they scream at you. They beg you to join them and reveal their cards to those that are paying attention that they are one of your high probability trades. In this situation, you can enter with less hesitation, less fear, and more peace and excitement, and potentially more size. So for me, with this probabilities, more confluences equals more higher probability of success, which equals a better grade of that trade setup. So such a great situation to experience, really. You can feel it when it's happening. Sometimes I'm literally still in the trade and I'm actively starting to journal on my other screen where and when and how my target gets hit while the trade is still marching out, because of such an increased confidence in these high probability setups that probability situation provides with all of those confluences. It's just such a gorgeous situation when you couple the concept of trading probabilities with an ideal red day management. And especially as we're clearly not trading right now. So while we're discussing this topic with you all, it's obvious how we need to behave day to day. We can see it from an objective stance. I can completely concede that 100% success rate as a trader is extremely rare and certainly not common in your first several years of learning to trade. But that doesn't mean that you can't start to build a positive and steady-ish equity curve once you really start to fine tune and calibrate your edge. There can be pullbacks on an equity curve and it will still be bullish. That's those red days fitting in there. This is my goal at my current stage in my trading career. My intention is now to just shorten and decrease the depth of those pullbacks. And this is done in large part by respecting the game that I'm in. The probabilities of this career and the systems that I have created to cut trades when my trade plan is proven wrong, to manage my emotions and prevent tilt or trauma days by increasing my awareness of it all in real time. So that's for me what it looks like to put it all together in my trading business.
Yeah, it's a lot to put together. Let me tell you, it has been a lot of moving pieces, like the puzzle I always talk about. I mean, just from the knowledge and experience we've gained from year 1 to year 2 to year 3 and onward, catch us next year. So we'll still be trying to put it together, right? Just even on a better equity curve. So I just love that healthy perspective on how we can manage our red days and probabilities. This is the game we're in, and it's that trader maturity that we're always striving for, and it's just a work in progress. So we've had so much support in this area throughout our years, as I mentioned, trading now, but we're still frequently having like new revelations and reminders of just the type of trader, that we want to be, that we're working towards. So it's always easier said than done, as Becky said, and everything is so clear. Hindsight is 2020, but it is the work that is required, for true breakthrough. And I know for me, it sometimes feels like the harder I do try to improve specific errors and performance flaws, it's very uncomfortable. It almost seems like it gets way worse before it gets better. But that's just what it is. And I'm here for all of it. And I hope that what we share with you all connects with you guys in your own trading journeys, or if you're potentially thinking of getting into trading, that we can kind of give you insight on what it looks like, to just be constantly working at it always. But red days and probabilities it's a work in progress for sure.
Yeah, well said. I mean, we're not perfect. We're far from it, but we're dedicated enough to recognize that a red day needs to teach us, because we're not quitting. And so we leading into the probabilities, which is a studied statistical information from trading, that's real. And you can use that to kind of help focus on your system and hold it together during the growing years. So thank you for hanging out with us today, everybody. And as traders, Kendra and I have been taught and learned through our own experiences to respect and appreciate the influences of these probabilities in our trading business. And we always try to inject logic into our trading system so that we can honor this exact relationship every day at our charts in our business. So please do us a huge favor and like and subscribe if you found value in this video. It really means a lot to us. These correlations and lessons that have helped us level up as we grow as traders, we really want to just openly talk it out with you, because we hope that it can help at least maybe 1 or 2 other traders out there that are similarly striving. So check out our website, and socials are all listed in the description below. Click on any of them to find us somewhere else if you'd like. Our best trading days are ahead, you guys, so stick with it. Take care. We're happy you're here with us. Bye.
Bye.